At first you don't succeed, try again. That's what Zuck's doing here, folks. He threw a lot of darts at the board, but does he have something that's sticking? Well, we'll talk about that. We'll talk about the price action. Well, really good price action. Now we'll talk about the other catalyst. We'll talk, is it major competition for the other AI giants? We'll talk SK Hynix. So where's that thing going to open? How high will it go? Delta earnings, beat raise, stock down $1.20. Who knows? Big run into it. Maybe we'll get some earnings in there. Other earnings, Louis Sykes 815, Eric Krull 835. We got to get it going here on pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, let's get it going with our charts from TradeStation. Born to trade, chart analyze, customize, all-in-one platform. Folks, trade smarter, move faster, stay in control with the platform built for serious traders. Well, we're finding resistance. We're down 575. We're trying to break through to the other side. We'll see if we can finally get into that 7,600 handle. Down, as I said, down $6. The buck, not doing much here. Just hanging out 10066. TLT trying to catch a bid up 3 cents, 84.52. USO off the lows of the move, but just holding steady here, up $1.23, 110.24. SLV and GLD both in the red, not by much. Silver in the red a little bit more, down 1%. 0.5% for GLD, and Bitcoin trying to clear that 65K. Let's bring in our meta enthusiasts to the show. Triple D, pounding the table on meta. Is he finally going to put the $82.69 billion worth of CapEx to work?
He's been putting it to work. And, this is what we were talking about yesterday. And I think the day before, and saying, do we think Zuck has just lost it and not going to figure it out? He's probably going to figure it out. And now what? Now everybody's realizing, oh my gosh, maybe he is figuring it out. Bring the Brentster in this conversation, because I feel like it's deja vu. We had this conversation yesterday, but we can have it again here. I mean, we were looking yesterday when Meta was trading down at 580, and we were looking hard in the pre-market. I'm like, how is this bad news? When they were coming in and, announcing, obviously, that they're getting into more, and they're going to obviously spending money, and people were worried about the spenders and they were punishing the spenders. But then we made the point, I'm like, if they're spending money, they're probably going to be making something cool. Well, they come out with a lot of good stuff in the afternoon here, and the stock just starts running and hasn't stopped running here. I think this market just does not think past immediate gratification, where you are spending money, we don't like you. You are making money, we like you. We see new products, though, where we can make money, we like you all of a sudden. It's the market that shows me the money. The products that Meta was releasing yesterday is a show me the money case, and that's why all of a sudden the Meta narrative suddenly changed.
And if you think about it, this came out in April, and people, April 8th, and they're like, oh, okay, more money spending, what are they going to do with it? And then you got some minor announcements in June, but two things this week really kicked it off. The Muse image, powerful tool, right? And all these users for it. And then Muse Spark 1.1 yesterday. I mean, you got a lot of eyeballs, and now you're bringing all that new AI function to all those eyeballs. I mean,
well, Brentster, give us a breakdown of the eyeballs, because this is a great point here. It's the moat. They have the community already. So imagine that Meta, just brings AI to its community. You don't have to go elsewhere. You don't have to go out. Like, they think the big picture is they don't go out to Claude. They don't go out to ChatGPT. They don't go out to Gemini. They just stay right here, and we bring them all the tools to them. I think the picture is correct, and I think it's genius. What is talk about the users? We never break this down. Go through Meta users. Brentster.
I think that the Meta users, they have to be some of the stickiest out there. So we have four main properties that have a hell of a lot of users. We have Facebook itself, which has about 3 billion users. We
3
have
billion
WhatsApp, 3 billion, 3B.
with a B.
Yes. We
There's only
have
like 9 billion people in the world.
we have
A third of 'em.
Instagram, which has 2 billion users. We have our next platform here, which I want to make a note here. This is not a social media platform necessarily. Facebook certainly is a social media platform. Instagram certainly is a social media platform. Their third property here, WhatsApp, is like an instant messaging service. I don't really use social media, and I use WhatsApp every single day. They have 2 billion users on WhatsApp. Facebook Messenger has 1 billion users. So we just got up to 8 billion users there really quickly. I think the thing that is changing, and I think you said it, Dennis, and we were talking last night on the AI Power Hour with Brian D about this, is putting this information at these users' fingertips. If a user that is using Facebook doesn't have to leave Facebook to use AI, or like the example that Brian gave us yesterday with one of the new models, if a user on Facebook has a business and can make an image for advertising something on their business on Facebook, I think we have some kind of game-changing moment here for Facebook.
Yeah, well, it's an eye-opener for the market that this money that they've been spending for the last year isn't just going to waste. I went and played around with Muse for like 2 hours last night after Brian was showing us in the STN think tank. The imaging is awesome. Really good. I mean, is it as good as ChatGPT? It's right there. I mean, but I don't have to go open a ChatGPT again. I don't have to go over there and, because I always use, we're using Claude, we're using Gemini. My wife has ChatGPT, but I'm like, I don't have to go bother doing that. It's right here. It's free. I don't even have to pay anything. Like ChatGPT is $23 or whatever you pay a month for the upscale. I'm like, this is good. I'm like, I don't have to pay anything, just free. And then the developer stuff they're announcing here too. Like they're trying to go out Anthropic here too. I mean, it's the way to go. This is what Meta needed to do. And it's funny how I've come full circle because I was 6 months ago and I was long Meta and I was like, I don't know, man. They have all these users. They're going to get disrupted. They're going to lose some users maybe because new social media platforms are going to come from elsewhere. And, I've come full circle here now because I was like, these moats, it's just not that easy to make people move and leave. And when you have 3 billion people on Facebook and 2 billion people on Instagram and 2 billion people on WhatsApp, you already have the people there. All you got to do is keep them. It's hard to get the people. It's not as hard to keep them. And if you're bringing them tools that will keep the people on the platform and then you make more money off of these people, that is the way. So Zuck is figuring it out. And, props to the people who've held through Meta on all this because I've been up and down. And I was like, I don't know what I think about this stock. If you've been listening to Pre-Market Prep for the last 6 months, I was like, I don't know what to think about. It could get disrupted, but they could figure it out. And then, about a month ago, I'm like, you know what? I think Zuck's just going to figure it out. And that's why I rebought my Meta around $600. And I've been in it for the last month. I've been up in it. It was up at 640. Then I was back down at 550. I bought this like May. So I've been everywhere in this stock. So I'm not like ringing the register, or I'm not saying like, doing a parade here that I got this one right. It looks good now, but we know it could just pull back again. It's been really choppy here. So maybe talk about the technicals here on Meta, Joel, because it's been a chop fest.
It has. It's been just a crazy chart. It has a history of filling gaps. So I'm just going to limit my comments. You went all the way up to 6. I mean, this crazy price action here, the drop, it tried to rebound. It came all the way down and filled the gap near that 540 area. Also gave you a double bottom and then flipped a switch on this yesterday because it was down in the morning. Then all of a sudden they loved it. I'll just give you a gap fill on the upside. We haven't reached it yet. 663.81. We're not too far away from that, right? The way this thing moves, another $15. And then, maybe things sticking up a little bit longer term at the, 680 area. You had a lot. That's just taking short term for today. Finally cleared the 50. Now you get back above the 200-day. You get all those moving averages and momentum people in here. But certainly it has a step-up buyer right now and trying to fill that gap.
Where is the 200-day?
The 200-day is 643.20.
So we're above that right now. That'll get people excited there too. Now, Can it hold it? It's leaking here in the pre-market. There has been sellers on rips on Meta. We have seen this in the past. So is this just another one of those days where we get the ripper in Meta? It's up 10% a day and all the sellers just come in and knock it back down. I mean, that's what has happened before. I'm going to say, I don't know. I don't know the short-term action, but I'm investing in Meta. So on dips, I probably will increase my investment in Meta because they have all those users there, and it looks like they're finding a path to monetize them even more now. I mean, we can talk about the spend, but we can look at companies like Anthropic and OpenAI that have grown their market caps tremendously in the private markets with excessive spend. So it hasn't been about just spending. It's spending if you're showing me user growth and production. User growth is going to be an interesting thing for Meta to try to show because they're already all there. But I mean, if you can find ways to monetize them in a better way, Meta is not trading 100 times sales. Meta is not trading, with no hopes of profitability probably for the next 5 years like an Anthropic or an OpenAI. Meta is trading at 16, 17 times of forward earnings here. So the stock is very cheap. It is cheap for a reason that people thought, they're spending excessively, and we're scared of that. If they start showing them products for the reasons to spend excessively, the multiple expansion could start back up here again because none of the Mag 7's trading this. Well, Microsoft maybe is close. But, you got Apple 30 times, and obviously, NVIDIA's up at 27 times or something, 26 times earnings. Forward base is a little bit less. But, I mean, this is not an expensive stock. So if they start showing you that, hey, we're going to start monetizing our users in new ways, man, sky could be the limit. I think Meta could be at all-time highs by the end of the year.
I wanna show this tweet, Dennis, last night that you thought was impactful for Meta shares. It's a Citrini tweet. We know they're a notable source. Check this out. It says, Meta strikes me as one of those setups where it's going to rip so hard that when it's done, everyone acts like it was obvious the whole time and pretends they were buying it the whole way down.
Yeah. So this tweet, Meta was actually, I was trading it last night. It closed 631. It was trading like 628, 629 all night. This tweet came out of 557. It started igniting it. It started climbing. And then Jim Cramer comes out on Mad Money, literally right off the hop at 6 o'clock. And it's kind of saying the same stuff we were saying. You think Zuck isn't going to figure this out? You think he's spending money and he's an idiot and he's just burning the cash? That's what we were saying. He's saying the same thing. I mean, obviously, we have content sharing going back and forth sometimes with CNBC. But I mean, I'm fully on with you, Jim Cramer. That's what I was saying here. So you had within 5 minutes, you had Trini and Jim Cramer pumping the hell out of Meta. And that was the explosion last night. If you look at the chart, you'll see the new explosion right at 6 p.m. where it ran like 10, 12 bucks. It was steady climb because Meta's a pretty thick stock. So it doesn't just explode higher usually. It's even thick after hours. But it started climbing right at 6 o'clock, right there with the Citrini and the Cramer, and just kept going and going. And it went all night. It just kept going. Now it's leaking here a little bit here right now. But, we're at this point here where, we know momentum traders like it when stocks are going up. And if you start getting some momentum going here, that's the case where this stock can start carrying itself. I look at my social media platform here right now. Oh, we got Trump breaking stuff. So if I look at my social media, lots of Meta on this. We got talks aimed to address the implementation of the U.S.-Iran Memorandum of Understanding and issues that triggered the recent U.S.-Iran escalation, includes disputes over navigation in the Strait of Hormuz. So, okay, we just popped 8 S&P handles there because we have some talks from, who is that from? Do you have
that was from a Qatari official. Qatar negotiators are in Iran to meet Iranian officials in an effort to de-escalate tensions and create conditions of broader negotiations to talk.
Okay. So, anyways, that's why you just popped the S&P there. So sorry to interrupt on my own.
Trump doesn't even like a 10-point decline in the S&Ps, man. He doesn't want to see that thing.
None. Well, that wasn't Trump, though, right?
That was
didn't
not
come from Trump.
No, okay.
No, I don't think so.
No, I don't think it was
No,
so.
okay.
No.
Okay. All right.
Incredible.
We are going to get...
how quickly, the algos are just instantaneously. Joel, that I bring up the S&P chart here just to give the algo action here. It's instant. It's like you blink your eye and it's just up there. So, I mean, we were down, well, we're back down here now. But, I mean, what did we just pop there? Look at
it. That's a 1 minute chart.
That's a 1 minute chart. So we just literally popped, 10 handles there in 10 milliseconds?
Oh, well, that's a minute. Actually, I mean, spitballing it, 79 and almost 20 handles. in 1
20
minute.
handles in like 10 milliseconds there.
1 minute.
Again, this market doesn't really care about the war anymore, so don't expect the S&Ps like, oh my gosh, we got a 700-point ripper here. I don't think that's going to happen here today. So, but, you know, the algos don't know that. They just buy them up 20, and then they lose some money on that. So, you know, you get these rips on the headlines. They're almost all fades in both directions. I just been fading those moves in both directions here because the algos haven't figured it out yet. They'll figure it out eventually, but they're still trading off oil headlines. Market hasn't cared about oil headlines in a long time. Never-ending talks. That's what
double guess.
And never-ending talks is what it is.
Double guess day. We got to get going.
Let's go. Louis Sykes, come on.
Louis Sykes, Chart, senior analyst, All-Star Charts, joining us here. Is it cool there in Zealand? You got New Zealand? You got a warm jacket on there.
Yeah, we're moving into winter, and it's, you know, middle of the night here, so it's a little bit brisk. So I got my jacket on.
You get snow there? Is there snow in New Zealand?
There is. If you go down south, there's plenty of snow, but I'm right at the very top of the country, so it's pretty tropical here.
You stay out, so you're like in the Florida of New Zealand. Is that where you are?
Essentially, yeah. You know, I'm right on the beach here. You know, I look at the ocean and all day, and it's beautiful.
What's the temperature of the ocean?
Well,
that's a hard question.
That's a hard question. You know, I get a wetsuit on. It's not too thick. You know, a nice thin wetsuit, and that'll be good enough for me to go for a dive.
Okay, so it's not like 80 degrees then. It's cooler than that.
Right? I can't win. I can't wear a swimsuit. You know, I gotta have a wetsuit on.
Okay. So it's cold. It's still cool.
Yeah.
All right, so now we got the ocean temperature, and we got, you know, the geography of Louis Sykes here, but we need to get, obviously, the mind of Louis Sykes in the crypto world, and that's what we're all here for, is to analyze crypto for 15 minutes with crypto expert Louis Sykes here. Start with Bitcoin. I mean, we always got to start with Bitcoin. Start with top-down approach here. Start with Bitcoin here. We'll bring up your charts if you've got them, or we can show charts as well. It's up to you. But, you know, we've stopped going down. That's good news. What now? We're going to bring these Sykes charts onto the stage.
Yeah, we'll take any good news as it comes in this space. It's been a pretty tough bout for the crypto space, obviously. So the fact that it's not going down is a positive because, Dennis, one thing that I first learned about markets was before they go higher, they need to stop going down.
True. Good point.
It's just a mathematical reality, and so you know, Bitcoin holding this big level of support here, a nice little RSI divergence. It could even be a little bit of a failed move. You know, we moved below that support. I remember I came on your show about 2 weeks ago, all doom and gloom, saying, "Fuck, you know, I don't want to own any Bitcoin here." Excuse my language. I don't want to be owning any Bitcoin here. But now the situation is reversing. Bitcoin is holding above 60K, and from failed moves come fast moves in the opposite direction is the way that I was taught.
Okay, so we've consolidated, we stopped going down. Is there a path where we could actually get back up to, you know, where we were in May here, 80,000? What are you seeing on this chart? Like, do you think we've got a path here?
Yeah, absolutely. I think in the back half of the year, I think a little bit more stabilization. Like you said, a move back towards 80,000 in the back half of the year is totally within my expectations. And then looking ahead in 2027, I would want to see this thing working higher. If it isn't, if equity markets keep working higher and you have Bitcoin and all of these crypto assets still not participating, that would be a more serious conversation about a pretty structural change in this market, because you know, crypto has been pretty correlated with technology and growth. And so if that correlation was going to break down in a meaningful way like that, that would be a pretty serious concern. So I would want to see Bitcoin work higher next year.
Okay, and we always ask you about the other currencies, and you say you don't care about the other currencies. Is that your modus operandi for today?
Yeah. Look, I think that the big story today, and I'm going to switch to my Circle chart. Circle is up just in the early morning trading. It was actually down 18% just a few days ago because there was this big announcement that there was going to be this new open stable coin called Open Standard, and there was about 140 firms all around the world that were wanting to work with this new stablecoin company, Open Standard, because it was basically a not-for-profit, and it was going to be distributing the interest income to all the distribution partners. And so Circle, obviously, that's a bit of a threat to their business. If their business is to keep the interest income, and this new business is a not-for-profit, and it's going to distribute that income, that's a bit of a threat. So the stock was down 18% of that announcement, and then today we've almost reclaimed a lot of those losses with the national banking charter or license that Circle is looking to acquire. So it's an interesting turn of events here in this stock.
Do you look like, and do you track, I mean, obviously it's a stock versus crypto there, and we know you kind of look at everything there, but we've kind of been in this, what I've been saying since the turn of the quarter here, since 1st of July. We've been in this like laggards are winning market all of a sudden. Like we've had a sell-off in the leaders of Micron and SanDisk, and some of these software names, even look at the IGV, have come back tremendously here from the lows. And I mean, Circle fits that category of a laggard, like big time. It's went from $140 to $63 in the last 2 months. Like, do you track overall, like you're looking, what's happening? Because what I see kind of happening is this market is kind of just exhausted with buying the leaders, and it's kind of combing the ditches and looking around for like the laggards that might play catch up here. That's kind of what's happened the last 10 days.
Yeah, and even if you have a look at the healthcare space, right? Like, look at how much healthcare has perked up over these last few weeks. It's almost just done nothing, and then you have this major move taking place in biotech. And my friends and other analysts tell me that that's another AI story, because you can use AI for medical research, and it can help speed up and make this stuff more efficient. And so I think, like you say, I think we're still in this stage where the market doesn't really know how to properly value these companies with AI. I talked about how there's all of these professional services and information service names that have really sold off quite aggressively, just because the overall sector or industry group has been re-rated based off AI fears. But there's actually going to be a handful of companies within that I think are actually going to do really well in this era of AI. And so I think, it's really difficult to understand what the impact of something as complicated as AI is going to be on the overall economy. And so I think there's going to be, like you said, this ebb and flow and this money flow rotating in and out of these weaker areas. And that's precisely what you want to see in a bull market anyway. You want to see the lagging groups catching up to the leading groups.
What else you got there for us, Louis? Or put your charts back on the screen. So I know you always got some good stuff to present there, and I know there's some other slides hiding behind this Circle one.
There's always other slides for you guys. I think the stablecoin model is actually a really interesting one, and I've really dove down the rabbit hole this week of what money could look like. And stablecoins, don't make the mistake, because it is very intentional that they designed this regulation with the Genius Act, that they knew that these stablecoin providers like Circle and Tether, they back their stablecoins, or what I call digital dollars, new forms of money, with T-bills. And so it is required by law under the Genius Act. And so even, Scott Besson is out here saying that it's going to drive an increased demand for treasury bonds. So I think stablecoins are going to be really interesting. And, stablecoin companies like Circle and Tether, they are actually now some of the largest holders of US government debt and some of the largest buyers, particularly on the front end of the curve. And so I think that's a really interesting model. And I think even if you just do a little bit of history, it's almost like going a little bit full circle. I've really dove down the rabbit hole, so we won't go too deep here. But, in 1864, the way that the currency really worked in the United States was that the Treasury issued debt, private banks held that debt, and then banks issued their own currency. But then nowadays, with the Federal Reserve Act and then later the Glass-Steagall, the Treasury issues debt, the Fed holds the debt, and then the Fed has been issuing the currency. That's how the US dollar has worked over the last century. But with stablecoins, this new form of digital dollars, it reminds me a lot of what 1864 the currency looked like, where we have all these private companies like Circle, Tether, So you have the Treasury, they issued the debt. These private companies like Circle or now Open Standard, they hold that debt and then they issue their own form of stablecoin or currency. And now with Circle getting a banking charter, I think it's almost a bit of a full circle moment here. And I think this is something that's really interesting to really keep in the back of our minds to evaluate this stablecoin story.
Louis, before we let you go, I just want to talk about tokenization and with the explosion in AI, we've talked about ways to perhaps capitalize on that. Just talk about your recent research on tokenization and ways that investors can participate in the proliferation of it.
Yeah, it's look, tokenization is here. It's certainly coming. And I'm talking with companies that now 10% of all of US global repo markets are going to be moved on chain in the next 12 months. Already $400 billion of repo is being processed through the Broadridge distributed ledger repo platform. That is approaching 10% of what is the lifeline of capital markets. And so you don't really see about it. You maybe see some headlines, but it is certainly coming. And so that's why I think there's two real trades here. One, it's actually owning the settlement layers and the technology companies building this infrastructure. And then two, actually looking at the traditional financial institutions that are going to benefit from this. The whole crypto story was about removing intermediaries and removing middlemen and decentralization, but that's not how it's playing out. And that is not why tokenization is taking off. Tokenization is taking off to provide more efficiency into the fold of the existing financial system. And so even having a look at CME, which I was talking about last time with you guys, I think this one was a screaming buy because the market was selling this company off fears of tokenization and perpetual futures. And I think, this is going to be great for a company like CME. Have a look at Bank of New York Mellon. This thing has literally doubled or tripled over the last few years because who's going to custody all of these assets? JP Morgan, some of these financials look great. And so I think there's two trades, the new emergent custodians and intermediaries in the space and the existing ones in the current financial sector.
Did you say the CME? Did you mention that?
Yeah.
Or GME?
CME.
You think that's a screaming buy?
Yeah, absolutely. Yep.
Go into it deeper because Joel's been wanting to buy the CME. He has been talking about this on pre-market prep for a while. Can you go into that argument just a little? He just touched on it there, Louis. You want to go in a little bit deeper?
I thought he said, yeah.
No, he's talking CME and he's talking like who's going to, manage all, so just repeat what you just said even.
Yeah, so, the CME and a lot of these exchange stocks like the CBOE, they sold off really aggressively over these last few months. And that really accelerated when the CFTC allowed Kalshi and Coinbase to trade perpetual futures to American customers, which just zooming out, Kalshi is essentially a glorified gambling website. And so this is not going to impact the moat of a company like the CME. And the CME is already in talks to establish something akin to perpetual futures. And so the market looked at this headline saying, hey, look, these new companies, they could trade perpetual futures, which are a new futures product. This could potentially eat into the moat that the CME has had over the last few years because, they can offer perpetual futures on stocks and commodities and any market and trade 24/7 around the clock. But here's the thing. These perpetual futures are great. I've traded them for the last 6 or 7 years, but they do come with risks. And the CME is absolutely right to be going to the courts to actually make sure that these products are fit for purpose. I'm not sure if you see this, but every few years there's a flash crash in crypto because of these products, because they have an auto deleveraging mechanism that they don't margin call you. They instantly liquidate you the moment you get a margin call. So you have these major flash crashes every few quarters. And so, of course, that's a bit of a risk if you want to move the S&P 500 futures into perpetual futures. And so that's why I think the market has sold these exchange stocks off the fear that these perpetual futures could eat into its moat. But I don't see it happening. And then 2, I think it's actually going to be a net positive for these businesses. And so I think this whole sell-off is absolutely ludicrous.
Wow. Couldn't have said it better myself. Louis Sykes. Well, I mean, also I think about the arbitrage. I mean, these guys, it's going to be the hedge funds, right? It's the hedge funds and the institutions at the Merc and the SIBO and moving these markets. And now you're going to put some retail out there and let them just pick them off. I mean, it's gonna be, a kid in a candy store. So, okay, all right. Louis Sykes coming in with a big statement there on the stock that's really sold off. Thanks, Louis. It's always great to have you on. Senior analyst, All Star Charts. That's Louis Sykes.
Cheers, guys. Have a good weekend.
Thanks, Louis. Awesome stuff.
Okay, chopping around here just a little bit. Double guess day on this Friday. Triple D, anything you want to sneak in here before?
Just quickly, we've kind of consolidated after the war headlines. We popped the 20 handles, and then all the human beings are like, we don't care about the war. So they sold off, and we're kind of not quite back to where we were. But I mean, if you're still chasing war headlines, you are absolutely doing it backwards. It is the fade trade on the war headlines because the market hasn't cared about the war in 2 months. Deal, no deal, escalation, de-escalation. You get these moments where, you sell off heavily on the war. What do? They buy Micron and SanDisk. They bottom tick. Like literally the headlines over the weekend was the bottom for Micron and SanDisk. So, I mean, I don't think the story changes here. I don't think this market nearly cares about the much as the war as everyone wants you to believe. So start trading what's in front of you. War headlines are on the back burner.
Yeah, I just want to mention the S&Ps here. I mean, they are just bumping up against 7,600. Like, look at how many times. I'm even going to go with a big, fat, thick horizontal line. I mean, not breaking out. We did earlier in the week. We got just above it. But it was last week's high is too. And I always say, this is a really important day in the market. But man, look at that. Just bumping. I mean, 1, 2, 3, 4, 5, 6 highs in that area. Let's get through that today, folks, and get up to all-time highs. But we've been going back and forth on SpaceX, and we've been talking IPOs. So we're going to bring you the top authority on IPOs on Wall Street. Let's go, folks. All right, coming to the stage, Eric Krull, co-author of the Lifecycle Trade. Finally, some good stuff to talk about, Eric.
We have something to sink our teeth in, don't we? The biggest IPO in terms of money raised in history.
Yeah, so let's go right to the good stuff here. And I'm going to get your PowerPoint up here, and the Brentster's going to bring it onto the stage, and we're going to start right out with it. IPO activity down, but proceeds up 540%.
Isn't that interesting? We have less IPOs coming out this year at this point in the year compared to last year. But of course, it's all skewed by SpaceX. When you have the average proceeds of 540%, I had to factor out SpaceX, but still they're up 139%. So the IPOs coming out this year on average are more than double raising the money than what they did last year. But there are less of them.
Just jump into SpaceX. Like, I mean, obviously it's this crazy number, and you think it'd be up only 139% without SpaceX here. But I mean, well, let's just go through your presentation. Take it back. Take the lead, go through your presentation. I'll save the questions for when I see a good spot to come in here, because I want to see this too. Best performing IPOs since January of 2025. So you're looking in the back a year and a half here. What are the best ones?
Well, looking at these, what are interesting is first, I almost always discount the ones that say medical biotech because those are usually bought on speculation, and most of those don't even have earnings yet or sales. But what I did notice this time was there are more than 20, even not shown on this list, that are up from their day one close that have come out in the last year. The last 5 or 6 times I've been on the show, I can only get a handful of stocks that even have gains from their day one close. But this time I found I think there was over 30. If SpaceX were on the list, you can see at the bottom there, it would be 50th. It's down 5% from the day one close. And we always use day one close as the measurement because that's That's the price that most retail investors like us could get. The ones that stand out to me on this list are the ones that are we've talked a little bit about CoreWeave, Carmen Holdings, White Fiber, and there's a new one here, Cardinal Infrastructure, which we'll talk about a little bit. And those are the ones that, to me, look more like the ones you could invest in. Everyone on this list trades more than $20 million of volume a day, and that's the kind of volume we want to see, because that's the kind of stocks that institutional investors can get in and get a good, strong holding on and not move the price too much.
Look at the industry names here. I mean, diversification here, medical services, building, heavy construction, and it kind of makes sense with the AI build, finance, aerospace, insurance. I mean,
it's a great point. We finally have a good diverse group of industries, and that's good for the IPO market and good for stocks in general.
I mean, is it just that the underwriters maybe aren't being as greedy, or is it the fact that a lot of these names aren't big names and maybe didn't have that huge hype to come in? You know, like you get a SpaceX, and we're talking about it for so damn long that, I mean, it's obviously going to open way above, you know, probably, and it didn't even open up that much high, 135 to 150, but they raise it up. We know the underwriters are greedy, and as the demand's there, they keep raising up the price, the underwritten price here. Is it the fact, like I look at a lot of these names, like CoreWeave's on there, which is a big one, White Fiber, but there's not like any like names that are like, oh my gosh, you know, this is a name that we really know. You know, some of these, like half these names I don't even know. So
yes.
Is that maybe a factor here?
I think it is. And I think part of what's happening is the biggest names have sucked all the attention. Which people are still talking about Anthropic and OpenAI and SpaceX. And these names don't get the attention because for whatever reason, you know, this seems like the media and the analysts don't talk about them. But there are some good companies out there. The other thing that's happening is so many companies wait so long to become, you know, to go public anymore. They stay private longer than they ever used to. And I think that's part of what's happened too, is you've got companies that were doing that now some of the younger companies, when they came out, they just don't get the attention.
Okay.
Ooh, I like this chart. What's this chart?
This is from our book on the left, is what we call the late bloomer iconic stock. When you can see that at the far left, you see that first arrow, that shows the price that came out in the day one close. And then you can see, this is a weekly chart, it goes up, has a gain, and then look how it undercuts, and see that lower line, that gray line, that's the day one close. Look, it undercuts it kind of went along, undercut even more while it's forming its due diligence phase. And the due diligence phase lasts 6 months to 2 years. That's those quarterly reports that come out, and the institutions want to see, is the company going to be able to produce the earnings and sales that they said they would when they came out public. And when they do, then they start to rise. And when they get above that dotted line at the top, we call it the turbulence zone. That's the high from the first, what we call the IPO advance phase. And when it does that, it typically forms some sort of base and then breaks out and goes to what we call the institutional advance phase. Well, look at SpaceX. It came out, you can see the low of the day on that was 150. It rose up, and the second day it went even higher. And my friend and co-author Kurt Dale developed this day two buy rule. Now, we always say never buy day one, but he noticed that when stocks go above their day one high, that can be a buy. And look, it went up for 2 days. Now you have fast rules on the way down. And my friend and co-author Kathy Donnelly, she did buy it day two, and she sold using fast rules a couple days later and got some profit. But if you held, look, it went down and cut below the day one low. And we've talked about that in the past. And I've checked all these stocks. There was over 296 of them, or around, exactly 296 went public in the last 18 months. 90% of them have undercut their day one low. That's why we say never buy day one, because you're going to get a better price 90% of the time later. And same thing happened with SpaceX. And now you can see it's kind of bouncing along, going sideways. And if you look at that late boomer chart, that chart is actually Palo Alto Networks, PANW.
Oh,
that
great.
1.5 or almost 2 years before it finally started going. SpaceX could go 3 months, 6 months, a year along the bottom here. And if it starts to form a nice tighter base and consolidates, the key is, will it go back above that high that occurred on day 3, which is now the turbulence zone. And that would be a good buy if it can get back above. I think that's $230 a share on SpaceX. But there's no rush right now. Watch SpaceX. If it can form some sort of bottoming base, a nice consolidation and break out of that, maybe even getting back above 170 range would be the place to buy. But you can be patient, and you don't have to buy right now, and you didn't have to buy day 1.
This is the hardest thing because, like, I like the story here. I think the SpaceX story, like, think about data centers in space, Anthropic, compute. I mean, it's in everything sexy. So I think there's an excellent story here. I have trouble, when it's like 100 times sales, but again, they're growing. The Anthropic comes in there, so you think it might only be 50 times sales on next year. So they're going to continue to grow. So that is going to come in here. It's the timing of this. Like, I want to be long this stock, and I bought a very small position just yesterday. But I'm like 10% of like what I did because I'm like, I want to talk to Eric and I want to see what he says, because this is like timing. This is critical. I mean, you can love the stock and the company can grow, but I mean, we've seen in the past, if you're buying the tops, the company grows like crazy, like Cisco, trading 80 times earnings back in 2000. Company grows for the next 20 years, but takes 20 years to get back to the price where it was because you just simply paid too much for the stock. So, I mean, that's the tricky part here is like, what is it really worth? If it was down there at half of, trillion, like 500 billion, to be like, back up the truck, this is a no-brainer. But when it's 1.7 trillion, and to the 220, when it was getting up there to be the top 5 most valuable company in the world, despite never making a dollar, I mean, that's a hard thing to swallow here. So, I mean, just going one more on SpaceX here, like you were saying, maybe we've got above 170. What if it like starts undercutting like the 147 low, like this low that it made the last couple of days? Is that like a get out? Now we're making new lows. We better just like not be in this until we start seeing it reclaim those lows. What are your thoughts? Like if that scenario happens?
If the second scenario happens where it starts to undercut that other low, I would sell. And I like 2 things you said. First, you bought only 10% of what you normally do. That's the smart thing to do with IPOs. They're more volatile, and you can handle the dips and ups and downs a little bit easier when you have a smaller position. So that was the good thing. The second thing is we don't know what it's really at. I mean, this is the first company that has a big AI system that went public, and they have Grok, right? So when you have X and you have SpaceX, they have Grok, they have the satellite phone system, Starlink. Starlink makes money. SpaceX does make money, but they had an off year last year, I think, because they had increased costs. So they're the lowest cost provider of payloads into space. That's a good thing, and that can really help a lot. They now have Starlink, the universal worldwide satellite service for phones, probably the fastest and best out there. And then they have Grok. So the question is, well, what's that value? We don't know yet. Anthropic and OpenAI will let us know that. But because that's so unknown, I think it's going to be bouncing around low for a while, doing that due diligence. It might be a quarter or two until we finally see earnings. And then when we finally get more information about earnings, then maybe it can grow. But in the meantime, small positions, and if it undercuts, I would sell.
All right. What else you keeping an eye on here? We got some nice looking weekly charts. Let's talk about these 3 stocks.
All right. The first one is Cardinal Infrastructure. We know that there's a nice building boom going on in the United States. I don't know much about this company. I've not looked into it, but here's what I do like. From an IPO viewpoint, a weekly chart, notice how it hit a nice high that week 1, and then it went sideways, and you can see that dotted line that broke through, nice stair-step consolidation, broke out, went up, broke out again, keeps going up. To me, it's a great start. It looks a little bit like what we call the stair-stepper, and I need to do more due diligence myself to know what they do and how much they're doing, but I like that pattern for an IPO. Veradermics, Maine. Have you ever heard of this company?
I haven't.
All right. MANE, guess what they sell? Maine hair. This is a company.
Yeah, horsehair. Yeah.
This is a company that's developed a pill to help you grow hair. Now, this is like the magic elixir they've been trying to do since Mr. Haney on Green Acres. And what you're looking at here, you're looking at a company I know nothing about, but I'm in the market for it. So I want to see how they do.
You're tracking this one closely.
Yeah, here's why I'm watching it. It's more than doubled in the first 90 days. We call those rare jewels. And rare jewels are stocks that you can play the IPO advance phase, like this has had a good one. Then they typically base, and then they go on for, after a due diligence phase, on for longer term gains. The rare jewels are ones that can go up. They have a more than they more than double their chance of going up 500% or more. So I'm going to watch this one, and I want to see what their phase 3 clinical trials do. And then we have Hinge Health. It's been around a couple years already, and notice how they had an IPO advance phase, then that long due diligence phase, and lo and behold, it undercuts day one like 90% of all stocks. And after the undercut, it starts to form a base at the bottom, and then it starts to go up, and it goes through that turbulent zone. And since then, it's been like a rocket ship, moving up almost weekly since then. So these are the 3 I'm watching.
Okay, the chat here wants you to take a look at one or a couple of them. BZ Tokyo is asking about CBRS to start with.
All right, can we see a chart here?
Yep. There it is.
Oh, okay. Yeah, I think you pronounced that Cerebus, right?
Nobody knows. They keep like everybody keeps saying Cerebrus.
Cerebrus.
We don't know.
Cerebrus.
Nobody knows.
I think it's Cerebrus.
I think it's Cerebrus.
Who cares?
I think it is.
Who cares?
All right, so looking at the daily chart on the right, look at you have your day one, the red bar, and it undercut that pretty quickly and keeps going down. And for me, this right now is what I would classify as a disappointment. It's not gone up at all from the day one close, and it's bouncing along the low. This is just one to watch. All you want to watch for is, can they form a base, some sort of consolidation, let's say a cup and handle or something, and start to go up. And it's going to run back into trouble around that 340 range, the turbulent zone. But right now, this is just a watch. I wouldn't touch it right now.
Okay, PAYP. You familiar with this one at all?
PayPay. This is one, look at that, had a very short IPO advance phase on that daily chart on the right, hit a high above 24, came back, and then went sideways for a while, which you like. And then what you don't want to see is when it undercut the day one low and sharply went all the way down below 13, and now it's starting to come up. This is just a watch. This is not a buy. To me, this is a danger sign. When you go sideways in a nice 19 to 20 range for a while and then undercut that, my guess is, I don't know. I don't know this company at all. Maybe they announced earnings and they disappointed. So at this point, this is a watch. You want to make sure it can get back up, and you're going to have turbulence probably around the 22 area and especially around the 24 area.
I want to ask you a couple. Do you follow SPACs? Like, I think you do a little bit. Like, not
I
as
do.
much as IPOs.
Yeah, I did a SPAC study like 3 years ago. The vast majority of them were terrible.
Yeah.
If you treat the day they announce the acquisition as day one, you can trade them like IPOs.
Okay.
Prior to that, it's just all speculation. They bounce around. They usually SPAC prices at 10. They bounce around for a while. And then when they make an announcement, they typically burst up, and then you have to watch how do they act, and you treat that day of the announcement as day one, and you're fine. But the vast majority, I could show you hundreds and hundreds of charts that are disappointments. They just go down and never come back.
Why is it? Why is it the SPAC so massively underperforms the IPO? Is it that it's just so much easier to do? It's like that they're just taking companies that maybe should never have been public, and people are just trying to, obviously create wealth from nothing here by, I'll launch a SPAC, I'll buy a company, and I'll get rich off of it. Why is it that SPACs underperform IPOs so tremendously?
I think you're on to some of the, I think when it came to SPACs, remember, they didn't go public by themselves. They were bought by these blank check companies who decided, I'm looking around for a good company. I'm looking around for a good company. I'll buy it and take it public. And this will be the easy way to go public. Well, the best companies don't need to do that. So, you're looking at companies that maybe are second tier in terms of quality. So they got acquired by some blank check company and they came out that way. I think DraftKings was the only one that I can think of off the top of my head that came out. It struggled for a while, but has done all right since then, although choppy. But most of the time, I think they are lower quality companies that if they were really good, they could go public by themselves.
It's a great
Okay,
point.
wow. What an informative session with Eric Krull, author of the Lifecycle Trade. Kind of going according to Q on the SpaceX. So we will keep an eye on it, keep an eye on the price action, and always a pleasure to have you on the show, Eric. Great information.
Well, thanks. It's always great to be here. It's always great to talk to you guys.
All right.
Thanks, Eric.
Thanks.
Okay, we bumping up against resistance, but we do have some earnings.
Mhm.
And let's get to some earnings. And I got Delta here. Delta beat and raised, Dennis. 156 versus 147, 19.75 versus 17.5. Guidance 2 to 250, up from 199. That's for Q3. Fiscal year 2026, 650 to 750 versus 593. So good numbers coming out of Delta.
Here, we'll bring the charts back up here so you can see the movement here in the pre-market. So bring up Delta here because we dipped on the initial headlines, but they have bought them back here. So Delta did dip a little bit here. I came in. Yeah, there you go. Now you can see it there. We're bouncing back here. I mean, I got to just say, like, it's been unbelievable that the airlines are near all-time highs. A lot of them. Like, this is impressive in itself because I would not have thought that we're going to go through a war, with oil. Like, it shows how much that the market really doesn't care about the war, because if you're still trading war headlines, the airlines, man, like, those were the ones that should get absolutely hammered, on these war headlines here. And they're not doing it. So, I mean, this is right there. Look, Delta at all-time highs, UAL kicking around all-time highs. I mean, this is the resilience in here is absolutely unbelievable. I know there's some laggards in the group. AL's been an eternal laggard. LUV's not been fantastic here either. But, I mean, the comeback kids here are there. The airlines bounce back quickly. They obviously had the dip on the initial war headlines, but the market hasn't cared about it for a long time. So, I mean, if your airlines aren't going down on war headlines, your tech stocks definitely don't care. So this is where we are just, the war headlines are giving you opportunities more than not to buy tech on dips. So that's why I love the war headlines, because the algorithms are so stupid. They still knock the market down on it. But the human beings are like, we don't care. And they come in and buy the dip. And I'm just blindly doing the same thing.
Had a really nice run here from 70 near the end of May up to 95. And then you just had some real patient sellers in the strength ahead of the report. And now you had about a 10-point dip. It's been all over the place in the pre-market. But if you're looking for this thing to go back to 95 and change, let's get back half of that move, 90-40. Let's put a little bit in there. All-time high. I mean, all three are, three highs at the 95 area. All-time closing high up at 93.66 for DAL. So we will keep an eye on that. Now it's flat on the session. Like when we were looking, I'm like, why is this trading under 86? Beat raise, but that's just a fickle finger of algorithms.
Okay, so we got a big IPO today. We should have had a chance to ask Eric about it, but we didn't. That was a big miss on our parts here, but we'll cover it ourselves here.
We'll tell Claude.
SK Hynix. Yeah, we just told Claude we're getting docked 10 points for that on the show rating today. But SK Hynix is coming out. Like, we do know, we have an idea here because this trades on Hyperliquid and it's trading there this morning here. I know the underwritten price, what is 149, Brentster?
Yes, I'm trying to show the website right now, but my SEC Edgar site is down for some weird reason. Yes, it's at 149. Yes.
Okay, so 149, and then we have to, the currency stuff is the problems here when we're looking at this. It's trading at 1493 SK Hynix, but there's currency effects here, so I don't know what that equivalent is. Somebody knows, again, but on Hyperliquid right now, this thing is active. Like, Hyperliquid is active. 1493. 1494 is where it's 1490. So it's $1,494 right now.
Okay, so I'm looking at the filing right now, and it says on July 9th, our issue on the Kospi South Korean exchange was trading at 1421.28 per common share.
Fantastic. So the equivalent right now, 1421. And on Hyperliquid at this moment, it's 1495, and it is actively trading. The volume here is there. It is trading like crazy. So we are up about 70 points on 1400, up about 5%. So if you were to take that 149, I guess we could say we're up by like one. My air math is bad here, but 70 points on 1400, whatever that math is, 5%. So 5% on 149, Joel, what's the air math on that thing? $7. So like 156.
Yeah, I think originally I thought
157.
$7, and then you started throwing some other numbers in there.
Yeah, carry
What,
the two.
155, 156 then, right?
I think so. That's where we're looking here right now. So you have Hyperliquid, so you can bring that. If you want to bring that on the screen, I don't know, Brentster, if you want to show, but it's actively trading here. SK Hynix is like active here on Hyperliquid here right now. We were as low just a couple days ago. We hit as low as 1320. We've rebounded tremendously with some of the hardware rebound up to 1553 just yesterday. And we're now trading down here 1495. So this is trading on Hyperliquid. You just go hyperliquid.xyz. And you can find the site. And so we can zero in on where this is going to be. So it's not a big guess as much as maybe someone like the SpaceX, because this has been obviously trading, overseas as well here too. So it's not like this is just all of a sudden, we don't know anything about this, we don't know where this company's going to open. This has been trading overseas for a long time. So we got a pretty good guess.
I am trying. Here we go. Okay, I can show you Hyperliquid real quick. It was this whole time I've been trying to get to Hyperliquid. It's not like it's that hard or anything. I'm just a dummy sometimes. So
I'm dummy too. That's why. Here we go.
Here is the actual SKHY trading on Hyperliquid. Yes, a lot of people have been using this to try to get ahead. You can see, nice price there, some volume. We don't know exactly, just to say it, we believe that this is not going to open right at 9:30. We believe that this is going to open. Prad heard earlier this week, I know I mentioned this on PreMarket Prep earlier this week, but Prad heard that this was going to open more like an Alibaba, let's say, than like a traditional IPO. But
what's the difference there? What is tell us about that?
Great question. I believe it is just because there is already an issue out there, and this they are calling an uplisting to the NASDAQ.
Yeah, for sure.
Calls it an uplisting. This isn't like an IPO per se. If you want to call it an IPO, I think people get it.
It's the company isn't going public here today. It is simply listing. That's the biggest difference. Just listing over here.
And like I was saying, we don't know the exact time, but we are absolutely going to be covering this all day. Whenever it hits, we're going to be covering it live in the STN Think Tank.
Yeah, so we don't expect crazy movement here because obviously this has been trading overseas here for a very long time. So this is simply just another listing here. But we were zeroing in, and it looks like, if we're doing our math correctly, like 156, 157. That's where we're looking at right now. So just slightly above that 149.
We did do a little poll on the STN on the STNX account. We had 20 votes. Not a ton. Chat, we need your help. This is already done, but when we do these polls, chat, give us a little hand. We're trying to actually collect some data here.
Data mine.
Nobody's under 149. Everybody's bulled up.
Isn't that funny? Well, so the prompt here was like the 7-time oversubscribed, 149, and it's 7 times oversubscribed. But like, just for future reference, when we do these, we're not just doing them to like try to engage necessarily. We actually can build a little bit of data here. So help us out next time with one of these polls, chat.
Yeah. Help us out by following @StockTraderNet. Put that on the screen here right now, because we're breaking news here now too. So, if you're listening, this is like more news for you here. Like, we're trying to break news here too, and we are breaking news here. So put it on the screen @StockTraderNet. Give our, news feed a follow here. We're going to actually be bringing you guys a news feed here very soon as well. We're just finalizing details. They've been using our news feed in the Think Tank now for quite some time, but we've got our own news feed coming at you guys very shortly. So we'll tease that a little bit here. We're going to allow the PreMarket Prep users to use it actually as well. So we're excited to bring that out. But, give us a follow. StockTraderNet, @StockTraderNet.
9 o'clock
9 a.m.
news dump.
9 a.m. news dump. Do we have anything? You
go look. We're looking at our news feed right now.
The press releases have been very quiet today. Friday is usually a little quieter, but check in the 9 a.m. news dump. Do we have anything exciting?
I'm looking.
Nothing yet. Nothing sticking out to me. STN News Desk, do y'all see anything exciting from the 9 a.m. news dump? They are quiet also. So Let's
It's been a
assume-
quiet week. We're getting into
Yeah.
earnings season though next week. Do you have a calendar for next week? Fee's already
do. Let's-
created it here. Bring
yeah,
up the
let's-
calendar here
yes.
for next week because it has been a very quiet week for trading here. Obviously, we're going to get SKHY here today, which will make things a little bit more exciting. But we do have a lot of earnings coming next week. We will enter earnings season here about Wednesday of next week with the big bank. So Brentster is
There it
bringing
is
up the
on
calendar
screen.
here right now. Actually, it's
Thank you, Mike
Tuesday.
Sheehan.
Look at this. We are loaded with earnings. So Monday, relax on Monday, enjoy yourself, But Tuesday, Brentster, you get ready because we're going to be breaking this news not only in our news feed,
Will
but
do.
obviously also in the STN think tank and trading some of these stocks live. Citi, Goldman, JP Morgan, Bank of America, Wells Fargo, all on Tuesday. Call it Bank Tuesday. Wednesday, more banks with Morgan Stanley, BlackRock's not an asset manager. ASML is huge for Wednesday. That can move tech stocks. Johnson & Johnson's always interesting as well. UAL in the afternoon. And then Thursday, we get some big names. General Electric, UNH, Abbott Labs, State Street, then Netflix Thursday night. Netflix has been in the gutter. Can they pull out of the gutter here? That's some WSJ article moving it down yesterday talking about live TV. Netflix scrambling a little bit here right now, but
Maybe.
NFLX will report on Thursday. We'll get some more information.
And PPI on Wednesday, if we're just jumping down to the econ section there, that's that third row on fees calendar that we're looking at on Wednesday, 8:30 a.m. PPI for the month of June.
Okay. Wow. What a jam-packed show. Big thanks to Louis Sykes coming on, talking crypto and the exchanges. Eric Krull always providing you great information. We'll clip that out there. Get that out for you guys later on. Busy week next here on pre-market prep. Going to get Todd Gordon back on Monday. A new guest from Wedbush on Tuesday. That'd be Martin Fan. Our boy Blue. Did I tell you that I met Blue? I met Blue in person, and he was in Ann Arbor, and we met at a place in Plymouth called the Sardine Room, right? And, Blue's from...
Did you eat sardines? You took him out for sardines? Is that where
no,
you actually...
we had oysters. We had, and he lives off the Potomac River off Chesapeake Bay. They had $1.25 oysters, Dennis. I ran up that Stock Trader Network credit card on that.
Oh, gosh.
Oh, man.
We're broke again here. We can't keep up with Joel's excessive oyster eating.
$1.25 oysters. And he said they were excellent. Yeah, excellent. So,
that's got to be quite a compliment.
Yeah. Had a few pops with Blue, and awesome. He'll be back on Wednesday. You guys asked for the cow guy. We're bringing you the cow guy.
Woo!
Yeah, on Thursday. And then poor Tony Pollock. He got Juneteenth. Then he got 4th of July, right?
Yeah.
So oh my gosh, we got to move him up.
Yeah. So
we don't ever trade on Friday. We don't trade on Fridays anymore. This is the problem.
Yeah. And then another jam-packed 4 to 5 hours of content on the Stock Trader Network. We have Tommy Lackey, Mark Chaikin, Thomas Hayes, Michael Lee, a lot of great people coming on. So, folks, have a good trading day, a great weekend. Back with you on Monday.
Thanks for watching Pre-Market Prep. Hit like, hit subscribe. Join the SCN Think Tank at StockTraderNetwork.com.